Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we're going to be talking about Ripple and XRP, as well as a few other things as well. So before we jump on into this video, I just want to ask guys to hit that like button. Of course, it does always help the channel grow immensely, and I always do greatly appreciate that. But with that being said, let's just dive in and let's talk about a few things. So currently, I am recording at about 11:33 p.m. It will most likely be about midnight when I have this fully rendered out, and it will most likely go up around like almost 3 a.m. Eastern Standard Time as per usual. So prices are most likely going to change a little bit, but I do want to warn you guys a little bit ahead of time before the indices open today at about roughly 9 a.m. Eastern Standard Time. As we are really kind of looking at things right now around this market, things do look pretty bullish, and I'd say, things look great. But on, the actual chart, we are still seeing Bitcoin at resistance. We're still seeing that nice daily candle close. I mean, ultimately, we've been seeing some nice price action over the weekend, which is usually, pretty nice. It's been slow and steady, nothing too volatile, as you guys do see by the closes. But a lot of people are excited that we are back over 30K, and honestly, to me, it doesn't really seem like anything exciting, to me at least. We want to see a nice price move on Bitcoin where we have a nice impulse above a resistance zone. That resistance zone will be around roughly 33 to 34K. That's where I'm expecting Bitcoin to actually have a full recovery path and go to 40K before ultimately having a nice little correction. Now, with this, I'm expecting some lower price action. In fact, I do think that the indices will most likely open a little bit choppy, which will price down Bitcoin as well as the entire altcoin market. Of course, if we don't see that, then I'm totally fine with it, but I do have a cash position waiting on the side to buy into a significant position, which, by the way, I'm going to be putting that on my website, ncashofficial.com, me taking that position and talking to you guys about exactly why I did. So definitely check that out when that does go live. I'll tell you guys on Twitter. Now, with this in mind, we are talking more so about the dollar. So, of course, yes, I'm definitely going to be watching the indices, but the dollar is one thing that I have been keeping a close eye out on. And we do see here from Rickish Trades, we want this blue line to break. And yes, although we've been seeing some slowed price action on the US dollar, I'm still expecting most likely us to hit 106 if we don't see a clear break on that nice blue line. And that is essentially the moving average on the RSI. We really want to see a nice breakdown below that, because if we go back to 2020, we see during March of 2020 us kind of, having that nice impulse off of the moving average, then ultimately breaking down below it. And once we broke down below it, it was very, very hard to reclaim. It took almost one whole year for us to reclaim that. So that's what we want to see with the US dollar. Now, talking about the US dollar, we do see our 5 warning signs. The end of the dollar hedge money is near. Here's what happens next. And you guys can go check this out on zerohedge.com. But we have been seeing a few things around this. First warning sign was the Russia sanctions prove dollar reserves aren't really money. I'm not going to break down too much on this. You guys could go read this article. But we also do see warning sign 2, rubles, gold, and Bitcoin for gas, oil, and other commodities, which we have been seeing a lot of that. We also see warning sign number 3, the petrodollar system flirts with collapse. We've essentially been seeing that as well. And then we also see down here, out of control money printing and record price increases. Of course, I don't need to tell you guys about the money printing. Here we have the discontinued M1. This stopped around, roughly February of 2021. We were at like 18.1 trillion. Yeah, let's see the M1 now. We are sitting at roughly 20.7 trillion. So this has not slowed down at all. I mean, you guys can see this going back as far as like 2010. We've increased this massively. I mean, even going back to like roughly December or even February of 2020, we were sitting at like 4 trillion. So you guys can see the significance of that. So ultimately, yeah, I think that we are going to see, ultimately the dollar collapse in terms of it being the dominant currency. We've already been kind of seeing disconnections within the dollar pairs on some trading pairs. So to me, I think that the dollar is nearing its collapse. And we actually do see number 5, Fed chair admits dollar supremacy is dead. And we do see conclusion, it's clear the US dollar's days of unchallenged dominance are quickly ending, something even the Fed chairman openly admits. So yeah, I mean, this is the 5 likeliness, moments in time that are imminent and flashing red warning signs. The end of the dollar hegemony is near. And yeah, I think that it's very, very close. Now, Also, within this, we've been seeing a few people saying, all right, we're in a bear market, we're in a bull market, this, that. Guys, it does not matter. And shout out to Alex for this, but we do see here, instead of bull market versus bear market, think seller's market versus buyer's market. And honestly, this is the best way to actually kind of look at this market. To me, I just buy things that are down significantly. I mean, you look at things that are down like 90%, 50%, 60%, and you're just like, man, just imagine when this bounces back. It could be, something could be down 90% and it will bounce back like 200 plus percent. And that's massive gains if you think about it. Specifically, even during, this moment in time, we're seeing the stock market be in a bear market essentially. But ultimately, when you look at things and you see things that are down plus 50%, moments like that don't come often. That to me is an opportunity. So I kind of look at this market right now as a major buyer's market. It's not a seller's market to me. I almost kind of compare it to real estate. Like right now, it's a seller's market. I'm not buying real estate. I'm not buying a house. I'm not even buying, a used car or a new car. I am selling everything that I can possibly sell that is inflated massively, because guess what? Now is the time to be a seller, not a buyer. But in this market right now, we're seeing some incredible discounts across the board, and a lot of people are way too fearful to buy because they think that, prices are going much, much lower. And, to me, I think that we have like a few impulsive moves left in this market before we do truly see mass euphoria, which that is going to be that wave 5. And I've talked to you guys about it. I mean, right now, I have been accumulating, but I'm taking a massive altcoin position. I'm just waiting for the perfect time, and I do foresee that, support zone being targeted on that asset. And I will clarify that on my website. Now, we do see here, breaking attorney John E. Deaton has filed a motion letter asking the judge in the SEC Gov versus Ripple case to let him write a brief on behalf of the 67,300 XRP holders who have been hurt by the lawsuit. The move comes following recent testimony from an expert SEC witness who gave a report on what information reasonable XRP holders were relying on when they bought the token. Deaton says he bets this witness gave testimony without interviewing a single XRP holder. More to come. And I do completely agree with him. Honestly, at the end of the day, we know that this entire case has hurt and stifled so many individuals that were going to make massive amounts of money. You look at the charts going back to roughly the December 2020, January 2021 timeframe, and you've seen a lot of altcoins ripping. You've seen Bitcoin and Ethereum starting to take off, while XRP sat stable and actually dropped all the way down to 20 cents. It is insane to me that they cannot see how bad this SEC lawsuit has hurt investors. It is not doing anything good for investors when the SEC is continuing to pout their idea that, hey, we are here to protect investors. No, they are not. Reason why this lawsuit came intact is because, and shout out to Wrath of Kahneman here, the OMFIF document, Future of Payments 2021 December, has some interesting issues that bear on XRP adoption. First is a Finastra mention of Ripple, and it's like putting fee pressure on banks. You would think a race to bottom favors a fast, cheap asset like XRP. And we actually do see down here that new products like Wise, Revolut, Tide, and Ripple are creating pressure on banks' fees income, as traditional players previously had a monopoly over corporate balances. He adds that open banking and APIs are enabling new players to provide a seamless customer experience when making or receiving payments. In particular, he says the use of QR codes and real-time payments is making it simpler for customers to raise invoices and receive payments instantly using the RTP framework. And I do want to specify something right here. This is the reason why Ripple was targeted. We do see, they're creating a pressure on banks' fee income, as traditional players previously had a monopoly over corporate balances. These individuals were getting rich off of every single transaction being made on a day-to-day basis, and they still are right now. When you target something like that, you put yourself in the crosshairs. And we do see down here, but maybe more interesting is MGI's discussion of moving from Ripple to Stellar and the difficulties of using DAs. The issue he raises is about gateways, exchanges, and the added time and fees incurred there. His solution, interoperability. And we do see down here, you guys could read all through this. Of course, this is talking more so about a move away from Ripple's solutions and into other solutions, but we do see here, there are tremendous efficiencies to be made through these partnerships. Yes, absolutely. Are there an equal number of challenges and obstacles to overcome? income? Yes, 100%. For example, it costs today on average about 1.5% to buy Bitcoin, and it costs you about the same amount to cash it out. Moreover, it's going to take several days to move it back and forth. If crypto is not taken at the point of sale, it's not a utility and ubiquitously used, and you're going to have to exchange it. Whether it is crypto to fiat or fiat to fiat, you are going to have to go through an exchange process, which is still slow and clunky. As such, it is not just about utility, but about interoperability, which is also why I mentioned Quant a lot. Quant is huge. I've always talked to you guys about Quant. I still believe that Quant is going to be essentially the new Bitcoin, and I've always talked to you guys about that and expressed my overall opinion on that. But we also do see here, which might not seem intuitive, but he's not talking about blockchain interoperability, how crypto Twitter uses it. He's talking about financial system interoperability, noting X currency transactions. So for him, payment equals utility, interoperability equals avoiding slow, clunky exchanges, which is exactly why I say, Quant is going to be the number one choice there, because they are providing interoperability between the legacy systems and the future digital systems. So pay attention to Quant. And of course, we do see down here, this is interesting to me, the drag of exchanges and gateways is suggest the coin with the greatest liquidity that is most readily available in the financial plumbing wins. XRP is fast and cheap, and Ripple seems plugged into existing financial payment structures, especially in Asia. So why did they stop using XRP then? The SEC? Why not Stellar? It shares most of the same technical advantages, but as of today, it doesn't have the liquidity or seem to make the same infrastructure inroads. Honestly, it's most likely just because of regulatory, issues. But to me, Ripple is already working with Quant in terms of interoperability. So for them to actually step out of the Ripple partnership, it makes no absolute sense, especially to choose something like Stellar. I'm not pushing hate towards Stellar. I'm just saying, Ripple has proven its grounds as a massive payment network. Now, also, in terms of the lawsuit, I actually want to talk to you guys a little bit about the lawsuit in terms of demand around XRP and also Ripple. So we do see here, this goes back to April 28th, by the way. Demand for XRP-based products has skyrocketed amid SEC lawsuit, says Ripple CEO Brad Garlinghouse. We don't even need to take his word for it. Look at the things happening around the entire ecosystem for Ripple. Just recently, 4 days ago, Ripple and Finci introduced the benefits of on-demand liquidity to Lithuania. This was huge. I talked to you guys a little bit about it. It's utilizing on-demand liquidity. Now, you see a lot of SMEs and even PSPs utilizing this for cross-border payments, and it opens massive doors for them. And they really avoid the barriers to entry as well in terms of this market. So I love this, but also this was not the only partnership that we've seen back in 2022, as well as even 2021. We go back a little bit to January of 2022. UAE-based money transfer firm announces partnership with RippleNet. This was huge as well. All talking about, digitized future and payments through, of course, this technology. Then we also seen 4 months ago, January 2022, RippleNet cements presence in MENA by partnering with Morocco's biggest bank. Followed by, again, going back to August 2021, RippleNet expands operations in South Korea, Thailand remittance corridor. And then, of course, I have this is the, this was the last one that I have, but this is also pretty big. And this actually goes back a little bit in time, even going back to the summertime still. Ripple teams up with SBI Remit for on-demand liquidity in Japan as well. That's the one that I was waiting for, but I didn't have that open on a new tab, so I'm sorry for that. But still, you guys can see the massive demand around RippleNet as well as XRP as a settlement token, as a bridge currency. When we look at things like RippleNet, I'm telling you guys, this lawsuit does not mean anything. What matters is the utility and the power behind RippleNet. These places are not going to have the SEC hold them back from achieving these massive efficiencies within these payment infrastructures. This is why I've always said, the SEC lawsuit is all smoke. There's nothing behind it. It's just all a massive distraction away from things that are actually happening around Ripple. When this lawsuit does end, which I foresee it ending in a settlement around Ripple will most likely win. And I think that, Johnny Deaton definitely fighting for the Ripple community is a great thing. To me, I just see a massive demand for RippleNet combined with XRP's potential. And everybody that always says, why would they even utilize XRP? RippleNet, 30% savings RippleNet with XRP, it's 60+% savings and instant settlement. So it's a no-brainer move for them to utilize RippleNet with XRP. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on. If you guys want more free content, you guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, I hope that you all have a beautiful day or beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.